Now, this law applies to all employers with fewer than 500 employees. There is a small business exemption for employers that have fewer than 50 employees, and there's specific reasons, and really it's a narrow exemption that you would have to meet to qualify and not provide the leave. But it's also important to note that the exemption only applies to providing the child care related leave. In other words, if an employee who works for a small business has COVID-19, a small business is going to have to provide that employee with the paid leave. Another important thing to note about this law is the paid leave is initially paid out by the employer, but the law provides for tax credits that the employer can take advantage of in order to ultimately get all that money back from the federal government. So that's just the big overview of the Families First Act.
Hey, so quick question. If I'm an employer, what do I look for to get those tax credits back so I can pay myself back for complying with Families First?
Yep, so the IRS, if you go to irs.gov, they have an entire page on this, and it's changing. And what they've asked employers to do is to sort of create a form that your employee would fill out if they requested leave, and the form should have certain things on it, like why they are requesting the leave, for how long, and what supporting documentation do they have to show that their kid's school is closed or that they're subject to a quarantine order. So an employer is going to want to have all that documentation so that they can either provide it to the IRS, or if they're ever subject to an audit for claiming those tax credits, they're going to want to have that documentation on hand for at least 4 years.
Okay, so there's the documentation. And then what taxes does it offset against?
Primarily, it's the Social Security tax that employers can offset against. And so what you would do is just hold on to that money that you would normally deposit into to the federal government and use that to cover the paid leave. And if it's not enough, then you would file through the IRS website for a refund.
Okay, great. Kierstin, thanks so much. Dustin, why don't you talk a little bit about the Paycheck Protection Program and EIDL? Just give people a general overview of what it is.
Sure. And can everyone hear me?
I hear you.
Cool. Okay, so I'm going to kind of talk side by side about these two programs. So just to kind of establish some acronyms here before I start going. So Paycheck Protection Program is a new program that was introduced in the CARES Act. It's a $349 billion loan kind of guarantee program, and actually I think it's about to be expanded to $600 billion this week in legislation. So that is a program where qualified lenders, bank, credit unions, stuff like that, provide government-backed loans to small businesses. And the CARES Act also expanded the pre-existing disaster loan program. In particular, it may be of interest to small businesses is the Economic Injury Disaster Loan Program, or EIDL. So we'll just use the acronyms PPP and EIDL here when we're talking about this. So what types of businesses are eligible for PPP or EIDL? It's basically the same analysis for both, which is any business, including a sole proprietor or independent contractor, that has 500 or less employees whose principal place of residence is in the United States. That's generally speaking pretty easy to determine for a lot of people, but the government has rules that require you to include your affiliates when considering your employee count. So what that means is if you have a subsidiary, that's an affiliate that you kind of have to aggregate together. Or if the owners of the business that either have a majority interest or control of the board or have significant negative control rights, that mean basically that they have the ability to block ordinary course business actions. If they also have control of other businesses, then they have to be included in your employee count. Now, there are explicit waivers for those rules with respect to small businesses in the restaurant, bar, hospitality, franchise, and franchise sectors. So for those businesses, you don't have to worry about those complicated rules. It's just as long as you have less than 500 employees per physical location, then you're good. So both of those rules apply to either PPP or EIDL.
So if I'm an entrepreneur and I've got other business interests, I should worry about including those affiliates or other business interests. But otherwise, if I've got less than 500 employees, I'm going to qualify for this, right?
Yes. One of the important things to think about here is there's no actual requirement to show an ability to repay the loan for PPP. It's really just, and there's no requirement that you even show any injury or economic loss. It's merely just a kind of a way to keep them paying your employees for about 2 months. So the amount of a PPP loan or an EIDL loan is different. So for PPP, the max loan amount is the lesser of $10 million or 2.5 times the business's average payroll costs, either for last year or the trailing 12 months. So generally what that means is, without getting too granular, it's, your cash compensation up to a limit of $100,000 per employee, and then some specific types of benefits such as payments on group healthcare benefits, retirement contributions, payment of state and local unemployment taxes by the employer. And there's been a lot of confusion about this point, but you do not have to subtract the employee's contributions to FICA, like Social Security and Medicare taxes from your loan amount. You do not have to do that. I think the government had released some conflicting information on that, but they've since corrected that.
Yeah, and that's an example of you really got to pay attention to current news. Last week, we were telling people not to include the employee portion of income tax. The federal government, from my perspective, they flip-flopped on the issue. You now include it. So make sure you're looking at current information. Go ahead, Dustin. Sorry to interrupt.
No worries. So for EIDL, the max loan amount is $2 million, but it's actually based on your actual economic injury as determined by the SBA. So, and maybe I should stop here and say that the EIDL is a government administered program. So you apply through the government as compared to PPP where you apply to a bank.
So a lot of people have heard about this $10,000 immediate payment under EIDL. Tell us about that. Right. So part of the expansion of the CARES Act included a provision that says the applicant can request an emergency grant or an advance of up to $10,000 on the EIDL when they apply on the government's website, which is sba.gov. And if they are later found to be ineligible for a disaster loan, then that grant is not, or that advance is converted to a grant, and it's not required to be forgiven, it's not required to be repaid unless you also get a PPP loan, in which case it's just subtracted from your loan forgiveness amount, which we'll talk about later. So I will also stop and say here that you probably, if you've already applied for EIDL or been reading the news, you know that the government had committed to providing $10,000 grants within 36 hours of applying. That appears to not be happening. I know there is a lot of political pressure from senators to get the SBA to comply with this requirement. I think they're probably just overwhelmed, but I'm not sure that I would plan my business around getting the $10,000 promptly, but I expect that you will eventually get it relatively soon, but I'm not sure that you can rely on that time frame right now based on the news we've been hearing. So
what are the terms of these loans? So there's no fees, upfront fees or anything like that for either of these loans. The interest rate on the PPP loan is a fixed rate of 1% per annum, and the EIDL is 3.75% for small business and 2.75% for nonprofits. So PPP loans don't have collateral or personal guarantees, but EIDLs still are generally going to require collateral for more than $25,000 and personal guarantees for loans of $200,000. So keep that in mind. And then what can small businesses use SBA loan money for? So for PPP, you can use the loan proceeds to cover payroll costs, which are the types of things we talked about earlier. Interest payments on mortgage, but not principal, rent, utilities, and interest on loans obtained before February 15th. And an important kind of caveat that they've recently introduced in the last couple of days since we last spoke on all this is at least 75% of the PPP loan proceeds must be used for payroll costs. So, I mean, that's an absolute dictum regardless of whether you're talking about the forgiveness or not. So keep that in mind. The EIDL can be used for far more business purposes. If you get both, then you can't use them for the same purpose, but the EIDL can be used to, pay accounts payable or to buy supplies to use in your business, capital expenditures, stuff like that. Generally speaking, I would suggest if you're going to get both to just use the PPP for payroll and to use the EIDL for other business purposes.
Hey, Dustin, thank you for that summary. So we've got a specific question here, and I want to encourage people to go ahead and send your questions in using the chat feature. Heather is going to moderate them, and we'll try to answer the ones that we think are generally relevant to the audience. So Dustin, we have this question. I run a single member LLC where I'm the only employee. Should I pick PPP or EIDL?
You don't have to pick one or the other. You can just apply for both. You're eligible for both. Getting one doesn't preclude you from getting the other. The only limitation is what I just mentioned, which is that you can't use the proceeds for the same purposes.
So if I'm a single member LLC, I can apply for PPP and get money to pay myself?
Well, you can use it to pay payroll costs, rent, utilities, or interest on debt.
Yeah, but I'm the only employee. So does it apply to me? Does it work where I'm the only employee?
If you pay yourself W-2 wages, yes. If you pay distributions, that's a separate question.
Got it. So we also had a question. Has anyone received EIDL yet? If anyone on this line has received anything from EIDL, why don't you chat and let us know? I've heard one person, and I've been talking to hundreds of people on these calls. So then the EIDL process is a lot slower than the PPP. There's the initial $10,000 that comes on government time in 3 days. It don't count on it in 3 days, but that's a fast payment. But otherwise, though, that application process is considerably longer and more involved than the PPP. Right, Dustin?
Yeah, and I think even, like I said, the $10,000 grant, people are still having trouble getting that. But getting the loan in general is probably going to be more like a multi-week process. Whereas I think I have started to already hear that some people have already gotten the PPP loans funded who had applied by Friday or Saturday. So, not everyone, but it seems like funds are beginning to start to flow already on that.
All right, we got another question. I want to clarify this. So the EIDL, the $10,000 payment under EIDL is not a separate payment. You have to complete your full EIDL application in order to qualify for the $10,000. It is essentially an advance on your loan before they can process it. But you can't just flip a button and get $10,000. You got to complete the EIDL application, right, Dustin?
That's right. And like I said, though, if you do that and they come back and you're ineligible, you don't have to repay it. Of course, if you are and you get it, then that's just part of your loan. But it's also, it has a maturity of up to 30 years. So, the government will probably offer you less than that, but it's still kind of a fairly long time frame to repay it.
So the EIDL is not forgivable. What is the interest rate on the loan? You mentioned 30 years.
So for EIDL, it's 3.75% fixed rate for small businesses, 2.75% for nonprofits.
That's a pretty good rate. Hey, so somebody has sent in a question that says, I don't have a business entity or LLC. This is a realtor that is 1099. Do either of these programs work for someone like that?
Yeah, they do. Unfortunately, I think as Will mentioned, the independent contractor and self-employed individual regulations haven't been put out by the government. If past history isn't any indication, then they will put them out at 11 p.m. tonight. So I would be on the lookout for that. But I can still generally say that you will be eligible. I think the difference would be that whereas if you have a business with employees that have payroll costs, we talked about how to calculate that. For a self-employed individual or independent contractor, you would be instead taking your net earnings from self-employment or your kind of income or wages and commissions for the past year instead, and that would be kind of your average monthly payroll instead of amounts paid to employees. And we expect that more specifics on how to calculate that and what evidence is needed to show to a bank to provide that will be released in these regulations that hopefully are coming out soon.
So right now, until 11 o'clock tonight, when I might see some regs, what can I do to get ready to push go tomorrow when I file my application?
So I would say for EIDL, which you can already apply for if you're an independent contractor, by the way, they require only a credit check for that. So really, it's just a matter of pulling together your tax returns for last year. I don't know if you keep books and records updated quarterly or monthly. Those are the kind of things you're going to need to pull together, electronic copies of. I expect that they will be generous in terms of proving for independent contractors what their income or net earnings from self-employment is. But if you've done your taxes for 2019 already, that would probably be the easiest way to be prepared to submit that. And if you haven't, then I would suggest that you get pronto, because the money is going out pretty quickly.
All right. So, and just to clarify, what's the time period? You mentioned tax return for 2019. Is that the time period I should be putting together my information? Sorry,
yeah, you have two options. One would be calendar year 2019, and the other would be the trailing 12-month period before you get the loan. So my guess is most people probably had a drop off in revenue for March 2019 or March 2020. So it probably results in a higher loan amount for you if you use calendar year 2019, unless you've just recently been going gangbusters. So that is I would calculate both if you have that information, and then you have the option to just use whichever one results in the higher amount. That's kind of explicitly sanctioned.
Thanks, Dustin. So we've got another question that's come in. This person is like many people probably on the line. They're both a sole proprietor and an independent contractor. How are the programs delineating the difference, and how should these folks proceed?
Yeah, I think it's a difficult question just because we don't have the regulations. I think you can probably expect to have to wait till the regulations come out to see how they interact. I generally would say that if you act as an independent contractor and also have a sole proprietorship, then you will just apply, you will combine those incomes, and you're only able to apply for one loan. So if you're in that situation, then I think you would just need to take both of those sources of income, take them together, calculate your average monthly payroll from that kind of combined set of sources of income, and then prove that up, and then get the loan that way. You wouldn't apply for both.
So we don't know at this point, if I receive W-2 money and 1099, if I can add them up and apply for both, or if I've got to pick the best one, the most income. We don't know the answer to that question yet.
Yeah, I don't think you mean W-2 though. I think you mean if you receive 1099, or separately if you also are a sole proprietor who files a Schedule D on Form 1040 and stuff like that.
Oh, I'm sorry. Yeah, I don't speak tax. I apologize. So
No worries. Me neither.
Can I add up my salary as a sole proprietor and my 1099 income and apply for both, or do I have to pick the best one?
Yeah, I think you would add them up, and you can only apply for one, but you can apply for one as if they're both combined, if that makes sense. You don't treat them separately for these loan purposes.
Dustin, to clarify the question that's being asked, say it's a musician who is sometimes paid via a salary, which would result in a W-2, but then at other times they're paid as a 1099. So it is that, how do you commingle a W-2 with a 1099? Nope, I might have stumped him.
Yeah, I honestly don't think that if you're just an employee and you receive a W-2, like me, I'm in that situation as an employee of Waller. Like, I can't apply for that based on my sources of income. But if I were an independent contractor, or I had a sole proprietorship for which I had generated my own income, then that's a different story. Those are eligible. And I'm sorry I can't be more helpful or specific on this. It's just still waiting on the regulations. Maybe we could put something out once we receive those as kind of a FAQ to help people.
So Dustin, I think if I heard you right, if I've got W-2 income, let's say I work a regular job, and then I get 1099, I'm say a musician, and so I have a regular gig that somebody pays me W-2 wages, and then I pick up money around town and I 1099 that. I can't include the W-2 income because that's as an employee, right?
That's right. I mean, yeah, that's the way it works. I mean, because theoretically, you're looking at a situation where you might be double dipping, or the business might be double dipping for that pays you the W-2 income, and they're not going to allow that. So, but you're right, Will, that if you have 1099 income, you can definitely apply for that on that basis.
Awesome. I have another question. It's multiple questions combined. It's around companies that have started within the past year, but do not have that trailing 12 months worth of payroll yet.
Sure.
Just to add 2 cents to that, I did fill out the application for the EC, and if I remember correctly, one of the calculators was for companies under 12 months. But you can correct that if that's wrong. Go ahead.
No, you're right. So there is something in the law that addresses that specifically. So you have to have been in business on February 15th, 2020. So that's the kind of bright line rule. But if you've been in business less than 12 months, or you started after January 2019, either way, you just take the time period that you have existed and take the average of that instead of the 12 months. So even if you were in business on January 1st, 2020, that's when you started, you just take the limited period that you've been in business so far and take an average of that.
think that answers it. So Dustin, somebody asked a question. When these regs get posted, where would I go look for them so I can read the original regs as opposed to somebody else's blog post about it? Where do I go get original source material on this?
Sure. Although I will recommend the Waller blogs, which are very comprehensive and up to date. If you want to read the source material directly, if you go to treasury.gov, there's a big link at the top that says, if you have questions about Paycheck Protection Program, then, click here, and then I'll have all of the FAQs, regulations, guidance, etc.
Right.
And actually,
that's irs.gov, right?
Treasury.gov, yeah.
Treasury, okay.
And
you
I would
mentioned the Waller blogs. So our website is Waller, WALLERLAW.com. There's a coronavirus button at the top in the middle. You hit that. We have people in all different areas that are digesting this material. I suspect that by morning, Friday morning, that we'll have something up. If not, we might have it a little bit later, but feel free to check in there. Dustin, I'm sorry I interrupted you. You were going to say something else, I believe.
Yeah, sorry. I was looking around while we were talking. I said Schedule D earlier when I was talking about sole proprietors, but it's Schedule C. So if you report your profits and losses on Schedule C of Form 1040, that's for sole proprietorships on your tax returns. You can include that income when you're applying, or 1099 income you have as an independent contractor. So those are the two types of sources of income that a self-employed individual can consider when thinking about their loan amount. So just wanted to make sure I was correct on that point.
Heather, do we have any more questions coming in?
Yes, we've got another one which may have been addressed, but it's looking for clarification on somebody who has a W-2, so they have a day job, but they also have an Airbnb that is under their Social Security number. What is the best thing for them to apply to, and how can they apply for both PPP and EIDL as separate businesses? How do they do that?
So they're an Airbnb, they're getting a regular paycheck. That's right.
They get both as two separate companies or separate businesses.
All right, Dustin.
Well, ask me something else. I'm looking. There's a list of excluded types of businesses that can't apply, and I'm looking it up right now because it's a long list.
So that, yeah. So that devil's in the details here. So yeah, there is a long list. I looked through it and I was amazed at the number of businesses that for some reason the CARES Act treats as more passive income, or there's a.
That's exactly what I was. That's what I was looking up because it rung a bell to me as possibly like a real estate holding company or something like that may be excluded.
Heather, do you have another question while we're?
Yes, I just popped one in the chat feature for you. It's, I heard that on April 6th, the SBA has decided to implement a $1,000 cap per employee on the advance up to a maximum of 10,000. So a business with 3 employees, for example, would be eligible to receive only 3,000 up front, as opposed to the originally stated 10,000. Is that a true confirmable change to the program?
I think this person is wherever they're getting the source of news from is confusing the programs. I don't believe idle depends on the number of employees, but Dustin, go ahead and answer that if you don't mind.
I think he or she is talking about the $10,000 advance under idle.
Right.
So I have heard that as well. Questioner, that to me, as someone who has read the law, strikes me as a violation of their administrative authority. They probably are doing it because they're oversubscribed. So idle's program funding is only $7 billion as compared to the PPP is, going to be $600 billion here shortly. So I've seen several senators, issue public statements or try to force the SBA to not go along with that approach. But I don't know whether that'll be successful or not. I think that all you can do at this point is just apply, and I don't know that filing a lawsuit or anything like that is going to get you anywhere at this point, just because they may or may not be exceeding their regulatory authority.
So in other words,
I think
if there's been guidance issued on that point, you think that it's probably contrary to the law, but it's based on just simply a lack of available money to be able to fund the $10,000. Is that what you're thinking?
Yeah. So it's not even in guidance. It's more just like that's their kind of public posture or approach to it. It's not written down anywhere. I know that a lot of people, if you have that issue, all I can recommend to you is just to call your senator and ask them to, insist on the SBA giving the $10,000 advance. I mean, maybe they need to get more money authorized in Congress to do that, but that's certainly a real issue that I've heard about as well.
So we had a question come in that has to do with documentation. This question asks, we have 4 founders with equity and 3 additional employees. They're trying to get a PPP loan / grant and would like to use their January 2020 payroll numbers their payroll numbers in January are significantly larger than the average 2019 payroll. The issue is that the 3 non-co-founder employees are 1099, and so they don't have documentation of the 4 co-founders' payroll, those with equity. So what do they need to do in this instance?
Well, I would tell the employees to apply on their own for their own PPP loan, because a business cannot include payments made to 1099 contractors as part of receiving their own PPP loan. And then if the founders don't pay themselves salaries through the business via W-2, then I would say to be on the lookout for regulations relating to self-employed individuals. Right now, I don't know that it's known whether or not that will include guaranteed payments on a K-1 or, stuff that, partnership distributions or membership distributions and stuff like that. Can't give you that answer right now. It seems like it could be that, which in that case, you might be able to, the founders on their own may be able to take PPP loans based on those distributions, but that is something that we'll need to see the regulations to confirm whether or not it's true or not.
So let me try to recap one of the things. So this one where we had 3 employees and 4 founders that are 1099. So the business itself could file for a PPP with the 3 employees. They don't include the 1099 with the application, but the 4 individual founders could file their own individual applications. Is that right?
I thought that the question had said that the employees were actually independent contractors. Is that not true?
No. So I've got 3 employees. They're real employees. I W-2 them. It's a business. So I've got either 4 owners of an LLC, and the LLC has 3 employees. So as I'm thinking, the LLC applies for a PPP for the 3 employees, and then the 4 owners of the LLC are 1099. So they're not included in the PPP for the LLC. They file separate applications on their own as like an independent contractor would. Is that the way you're thinking it works?
Yes. So sorry, I thought that you were saying the people that work in your business were independent contractors, but if they're W-2 employees, then Will's summary is correct. That's how I would look to do it.
So on the initial online EIDL application, it asks for the number of employees in it. If I'm a business that has 5 independent contractors and 1 W-2 employee, do I put 1 or 6?
It's just one, and the reason is that independent contractors are not employees. So, but I want to clarify that if you have a part-time employee or you lease an employee from a professional employer organization or temp agency, then those are still considered employees for purposes of this application. But the reason it's asking you that is just to certify that you're under 500 employees and you don't count independent contractors in your employee count.
All right, so we have another question. This one's on the PPP, the Payroll Protection Program, Paycheck Protection, sorry. So if you do not pay 75% of a PPP loan towards payroll, are you in violation of the loan? What happens there? Do you just lose the forgiveness, or are you in default and have to pay immediately? What happens if I can't pay 75% towards payroll?
Yeah, so this is a change from the last week's discussion, but you have to, even if you don't get it forgiven, even if you're not looking to get it forgiven, you have to use the loan proceeds at least 75% on payroll. Now, if you cannot expend 75% of the loan proceeds within the 8-week period after you get the loan, you can still do it. You can still spend the money afterwards. You can spend it as long as it takes. It's just, you still have to maintain that 75% ratio. So if you foresee yourself never being able to use 75% of the loan proceeds, within the next year or so, then that's one thing. But I think what you mean is if you're concerned about using 75% of it in the next 8 weeks, you should know that you can still spend the money afterwards on payroll. It's just only the portion within the first 8 weeks is forgivable.
Okay, so as long as I spend the 75% on payroll, I can go beyond the 8 weeks. It just becomes non-forgivable. It becomes a loan at that point. Is that what you're saying?
Yeah, you're still restricted. Like I said, you don't then get to use the money on whatever. You still have to use it in the same way. It's just, you just have money in your bank account, and the balance is a loan for, at that point, it's a 2-year maturity. So you'd have to start making principal and interest payments after 6 months, but no requirement to immediately pay it back or anything like that.
So let me clarify one thing. The Paycheck Protection Program was designed to put money in employees' pockets right away, right as soon as you get the money for the next 8 weeks, whether they're working or not. And that's the reason that requirement's in there. It's designed to help businesses pay their employees to work or not to pay them, or not to work, but you're paying employees, and that's the idea. Instead of having a government handout, the government is handing businesses money to hand out to their employees. If you've got work for them to do during that 8 weeks, that's great. But if you're like Alan Valentine with the Nashville Symphony, he's paying his orchestra not to work, and that's the intent of the law.
So on that, Will, to clarify, it's okay if your employees are working, you're still eligible for the PPP. Is that correct?
Yes, absolutely. I mean, it's great if you can find something for your employees to do while you're paying them. But if you just have to pay them not to work, that's fine. In fact, that's what the law is designed to do.
Okay, and how does that apply if, say, I'm a restaurant and I don't have a way, or I can't afford to hire back those people after the 8 weeks, once that 8 weeks is up? What do I do?
Dustin, that's a good question.
So, that we don't know, whether they'll provide a new law that extends this kind of approach, but all we can say now is that this is a way to continue to pay your employees for 8 weeks. After that, there is no requirement that they continue to be employed.
So I'm a shuttered restaurant now, for example,
yeah.
or I'm a shuttered business. I've furloughed everybody. So I apply for a PPP, I get the money, I bring everybody back for 8 weeks, I pay them salary, and then I lay them off again. Is that what I do?
There is no requirement to keep them on after the 8-week period. So I don't know what the business landscape will look like. If restaurants are still required to be closed, then that probably is the best course of action. But that's a business decision.
Kierstin, are you still on?
I am. I'm here.
Does that raise any labor and employment issues? If I've laid people off, they've applied for, unemployment, all of a sudden the business owner, gets a PPP and I want to bring them back, and I pay them for 8 weeks, and then my business is still shuttered by government order, so I have to lay them off again. What are the employment issues that surround that?
Yeah. So if an employee is laid off and they are receiving unemployment benefits and their employer offers them a job back, they're going to be required to disclose that to the unemployment agency, which if they take the job and they go back to work, their unemployment will be cut off. But if they're laid off again, they can refile. Right now, that $600 benefit that everyone is hearing about ends on July 31st. So they might not be able to receive the type of unemployment compensation that they're currently able to get.
So what if I'm a business, I get my PPP loan, I've got 10 employees, 3 of them are on unemployment, and they're like, forget it, I make more on unemployment than I would with my paycheck. What does that business do? Because all of a sudden I'm at 70% of payroll. I can't get the other 30%. What do I do in that instance?
So it's not tied to specific employees, so you could just hire other people. It's just a specific, it's just an average head count that's not tied to individual, but I don't want to comment on whether or not that action is legal or not. I think last time we talked about, Kierstin said something about, I don't know that an individual can actually do that without it being fraud.
Yeah.
But
so typically the way unemployment works is if an employee or an individual is offered a job and they decline it, then they would not be eligible for unemployment anymore. However, Tennessee has sort of addressed that it is a question right now, but doesn't know what to do with it, because the intent of the expansion of the unemployment benefits is to keep people home. We don't want people going out and working because they need to survive, but then also spreading the virus. So they're wanting to incentivize people to stay home. However, there is this concern of people taking advantage of the system, and Tennessee has not specifically addressed that, and whether someone could turn down going back to work and still get the unemployment benefits.
So it's really, it's kind of, you've got a loan issue with the SBA, and then you've got employees and unemployment benefits. If you offer people to come back to work for 8 weeks, legally their unemployment will terminate because they've got gainful employment. Is that kind of what I'm hearing, Kierstin?
Maybe, because the issue is, well, what if them going back to work, what if they're scared to go back to work because of exposure to COVID-19, which is a qualifying reason for unemployment right now. You can get unemployment benefits right now if you quit your job because of COVID-19. So say you don't want to be.
I'm sorry, but let's say that I get that if you're afraid to come back to work, but let's say you're getting paid to work from home, or you're getting paid not to work even. How does that impact unemployment? In that instance, if I get offered a job, if I get offered 8 weeks of payroll from my former employer, and they say you can work at home or we'll pay you not to work, what do you do in that instance?
At that point, you're not eligible for, you wouldn't be eligible for unemployment. and turning down the, and you would have to notify, because there's a weekly certification required, and you would have to disclose that, and the benefits would most likely be cut off.
Well, let me just say one thing. This is an SBA loan under a federal program, and there are fraud issues involved. I don't know how quickly the federal government will investigate, but I'm going to suggest to employers or employees that you document things and you follow the law, because if you violate federal lending laws, you can get locked up for it. I don't know how much enforcement there will be, but if you're someone who's like me and you don't like playing golf in jail, you need to make sure you're following the rules. And that goes on the employee side too. So someone has asked, how does PPP apply to unemployment insurance benefits for independent contractors and sole proprietors?
So I looked on the Tennessee website yesterday, and they have not addressed whether, if someone gets a PPP loan, would that qualify as income and maybe disqualify them from unemployment? So that's still an open question.
And I want to circle back. There was an open question about Airbnb. So I don't think that income is eligible because it's considered a passive business. And under that kind of analysis, residential facilities are not eligible for PPP. So I would not proceed to get a PPP loan based on income from an Airbnb.
All right. Heather, do we have any more questions we haven't answered?
Yeah, 1 second, and I will check that out for you. I believe that one, if I get a PPP and hire contractors as employees, can I use that money to pay them?
Independent contractors? It does.
Yeah.
If you're saying if you hire people but only as an independent contractor and not as an employee?
No, I already have 1099 contractor employees. Can I turn around and hire them as employees and then use the funds to pay for that?
You can. That's allowed. I defer to others on what additional costs or risk you may incur from turning a independent contractor into an employee, but it's really just an average FTE count of employees during that period. So if you hire independent contractors as employees, then that is acceptable.
All right, Dustin, you used an acronym there, FTE. Kierstin, that's a labor and employment term. What does that mean?
Yep. So FTE stands for full-time equivalent, and it's a different calculation for adding up your employees. So typically, whenever you think, when someone asks how many employees you have, you count just heads. I have 5 people that work for me. FTE is done a little bit differently. That is based on hours worked. So if you had 3 employees, one who worked 50 hours, one who worked 30 hours per week, and one who worked 20 hours per week, that's a total of 100 hours. A full-time employee works 40, so you would have 2.5 FTEs.
Thank you. Heather, do we have any other questions?
Yes, we've got time for one more, and that question is, we're hearing kind of mixed information and getting mixed information about whether or not you can use a PPP loan to apply that to pay 1099 contractors and apply that to the 75% threshold. So you wouldn't be paying employees, you'd be paying those 1099 contractors. Or do those 1099 contractors need to apply themselves for relief through PPP?
Yeah, so you cannot use, as a business, you cannot use the PPP loan proceeds to pay independent contractors. If they have questions about why not, then you could just say, well, you can apply on your own as an independent contractor. You're eligible to receive your own loan, and it's obviously going to be a lot easier for an independent contractor to get their loan forgiven since they don't have any employees. So there was, I acknowledge that there was some uncertainty about this question, but in the past few days that they've kind of come out with a specific answer that says no businesses cannot use PPP to pay independent contractors.
And Dustin, that's a great point. I said this before, I'm going to say it again. Make sure you're looking at current information. When you're looking at blog posts or you're looking at news articles or social media, look at the date that it was posted. If it's more than 2 or 3 days old, that information could be out of date. And you should really question things that you see that are older. Look for current news. Heather, do we have any more questions or are we out of time?
No, I'm going to sneak one more in on you. We might run over a minute or two, but when filing for unemployment as an LLC, the business requires inputting a UI employer account number. How do you get one of these as an LLC in the state of Tennessee?
That's a great question. So Tennessee has had to redo their entire system to try to, comply with this expansion of unemployment benefits. And so what I'm going to do, because they just put out this FAQ that speaks to this, and it's really helpful. I'm going to, Heather, send it in the chat to you,
Okay.
and then you can post it for everyone. But it walks through how to answer these questions for people that typically wouldn't qualify for unemployment. And I think that now everyone should be able to get through. However, I have not heard confirmation from anyone who is self-employed or a single member LLC who's been able to get through the application process.
Awesome. Do you have any final things you would like to say before we wrap this up, Will?
Well, Jane and Heather, I want to thank you and the National Entrepreneur Center for allowing us to talk to folks today. Dustin Timblin and Kierstin Jodway, thank you so much for taking time. I know y'all are slammed with work right now on all of this. So hang in there. Check out our wallerlaw.com, our blog post there. And if you've got more questions or more interest, send it into Heather. Perhaps when we get to the point where there's more information, we might have a